Welcome, hello, and good morning. Welcome, everyone, to this live Colorado Para telephone town hall meeting we have for you this morning. We had a few folks dial in early on our inbound participant line. I want to thank you all so much for being prompt. Please bear with me as I go through this intro just a couple of times as we are dialing out to thousands of Colorado Para members this morning. Again, welcome, and you are live on the line for our Colorado Para telephone town hall meeting we have for you this morning. Thank you so much for joining. Again, you're live on the line with Colorado Para for this very special telephone town hall meeting we have for you today. We're calling out to you this morning to provide you important factual information as well as open up the conversation and answer questions that you may have. So please stay on the line as we dial out to more and more members. If you have any questions today, please do not hesitate to press 0 on the keypad on your phone. You can do that now or at any time throughout this forum to get your question in line. Again, that is 0 on the keypad on your phone to get in line with your question. Again, hello and good morning. You're live on the line for our Colorado Para telephone town hall meeting we have for you this evening. We're dialing out to you to provide important factual information as well as open up the conversation and hear from you. If you have questions, comments, or concerns, I encourage you to press 0 on the keypad on your phone to get in line with those questions. We'll be taking those questions live a little bit later, but if you'd rather not go live, still press 0. Just let your operator know you'd rather not go live, and I'd be happy to read that over the air. Also this morning, we're collecting email addresses. If you would like to receive email updates from Colorado Para, please press 7 on the keypad on your phone. Again, that's 7 on the keypad on your phone to provide us your email address. That's a great way for us to keep you up to date and keep in touch with you. So pressing 7 on the keypad on your phone to provide us your email address and pressing 0 on the keypad on your phone if you have questions, comments, or concerns you'd like to share on this Colorado Para telephone town hall meeting we have for you this evening or this morning. Sorry about that. Also today we have a few poll questions we're going to ask your opinion on, so stay on the line for those as well. Right now might be a great time to grab a pen and paper to write down any important information you hear today. So last time I'll go through this intro before turning this off to Patrick with Para. I'm going to remind everyone, welcome and hello. If you're just joining, you're live on the line for our Colorado Para telephone town hall meeting. Press 0 on the keypad on your phone to get in line with your question, comment, or concern. And also press 7 if you would like to provide us your email address so that we can keep you up to date from Colorado Para going forward. And with that, it's now my pleasure to get our call started off by turning this over to Patrick. Patrick, please take it away.
Thank you, everyone, for joining the Colorado Para Telephone Town Hall. My name is Patrick von Kaiserlin, and I'm the Senior Director of Communications. We're here to give you an update about our recently released 2019 Comprehensive Annual Financial Report, also known as the CAFR, as well as to discuss our business in these turbulent times. Most importantly, we're here to answer your questions, so let me give you some direction on how to do just that. Right now, you are all in listen-only mode, which means you can hear me, but I can't hear you. If you would like to ask a question, simply press 0, and we'll start taking your questions in just a few minutes. In case you need it, a full recording of this conversation will be posted on our website next week. To find that recording, visit www.copara.org/townhall. And we're looking forward to our conversation today that will help you understand what's happening at Para and what it means for your retirement security. Again, if you're joining us, I'm Patrick von Kaiserling. I'm the Senior Director of Communications at Colorado Para, and we're here to talk about the 2019 Comprehensive Annual Financial Report, or CAFR, and to answer your questions. Press 0 if you have questions anytime during this call. All right, let's go ahead and get started. Seated next to me is Ron Baker, the Executive Director of Colorado Para, and Amy McGarity, our Chief Investment Officer. Welcome to you both, and would you please take a moment to introduce yourselves?
Thank you, Patrick. I'm Ron Baker, Executive Director of Colorado Para. I've been with the organization for almost 26 years. I started as an application developer, and my most recent position before being selected as Executive Director was Para's Chief Administrative Officer. I'm really looking forward today to answering your questions and giving you an update on our 2019 financials. But first, I'd like to turn the microphone over to Amy McGarity.
Thanks, Ron. I'm Amy McGarity, Para's Chief Investment Officer. I've been with Para for over a decade and have been in my current role overseeing our investments program since 2017. I'm happy to have the chance to talk with all of you today.
Ron, before we dig into the highlights from the annual financial report, perhaps you can start by giving us a brief overview. What is the report and why are we having a town hall about it?
Thanks, Pat. We do the town hall every year to really talk to our memberships about our financials. We are, in June, we release our financial information for the prior calendar year, and we did at the end of this June, and we're here to update you on where Para's financials stood at the end of 2019. And we do this every year so that we can have our members ask questions and learn about our financial situation. I want to be very clear that this is a one-year look, that what we're doing each year is we measure our financials every year. We are a long-term plan, long-term investor. So we have a long-term perspective as we think about our funding and where we stand, but each year our comprehensive financial report shows the information related to the prior year. It is chock full of information on our investment program, membership statistics, actuarial information as well. It's 300 pages long. Anything you'd ever want to know about the Para financials are inside that document. So to keep folks from having to read 300 pages, we have created a digital capper on our website, which hits the highlights, gets to where our funding sits, what our investment program looks like, membership statistics, and so on. So I would encourage you that for those who don't want to read all 300 pages, to take a look at our digital capper. Again, we have a lot of information available, and that's what we did the town halls, is to give a status, kind of an update of where Para sits. I've heard it called our report card, which is probably not the best way to think of it, is where is Para sitting now. But do understand this is a one-year look, and where we are at the end of 2019, we may be in a different place at the end of 2020.
So how much emphasis should our members and retirees put into each year's capper?
I think they should, obviously, it's a report card of where we stand, and we measure ourselves every year. So we find out how we're doing on that long-term track of getting to full funding by 2047. So it's important for us to take that look, but any one year is again, just a one-year snapshot. If we take a look at, Amy will cover the investment markets for 2019, which were very solid, but the 2018 investment markets were in a different place. So our financials will tend to move as it relates to that, and our overall funding will sit as it moves to that. So it's important to look at it just as a guidepost to where we're going. So it's got importance, but I don't want to put an overemphasis on any particular year. We are a long-term investor. We are a long-term program. We have members who will be with us, who have started work today, who will work a career and go into retirement that we will have as part of this organization for 60 years. So our perspective is a little broader than just a one-year look, but it is important that we, at the end of the day, measure ourselves to ensure that we're on track to being fully funded by our goal of 2047.
And how was last year's performance?
Para had a very strong investment performance last year. At the end of 2019, Para's investments delivered an annualized return of 20.3% net of all fees versus the benchmark return of 19.8%. But remember, as Ron just mentioned, our comprehensive annual financial report captures the answers to these questions as of a single day, in this case, December 31st, 2019. All of our asset classes had a positive return last year. The bond portfolio returned 9.2%. Para has a vast majority of its portfolio in global public equities, and that portfolio returned 29.5%. We were also able to make gains in our private market asset classes, where our private equity portfolio returned 13.7%, our real estate portfolio returned 8.4%, and the Opportunity Fund closed the year up 6.4%.
Thank you, Amy. And those strong investment returns, along with our demographics, I should get to kind of the bottom line of what it has done to our funding, because it's really, at the end of the day, we're measuring what is our path to reaching full funding by our goal of 2047, which was the goal of Senate Bill 200. And in our 5 divisions, the state division is now projected to be fully funded in 22 years, the school division in 24 years, our local government division in 14 years, the judicial division in 12, and the DPS division in 11. So the strong markets that Amy mentioned have moved our funding, our projections to a very good place. But again, this is a singular year. So looking forward, we want to make sure that we're happy about how the year went, but we're always looking to where we are in the next year. And as we all know, 2020 is a whole different ballgame in terms of what's been happening in the broader economy. So that is the long-term effect of what has happened with the strong investment year.
Okay, and if you're just joining us, I'm Patrick with Colorado Para, and we're talking with Para Executive Director Ron Baker and Chief Investment Officer Amy McGarity about our recently released annual report, which you can find at copara.org. Let's go ahead and take our first question from our audience. And William, you are live on the air.
Hello, my name is Bill Schleline. I'm a long-term teacher from the Thompson School District, and my question is, what is the long-term security of our pensions, which is really in a crazy time that we're living in? How for those of us who are getting up there in age, how secure are we in knowing that our pensions will be available?
Thank you, William, for the question. I think, as I mentioned, looking at our projections, we are sitting in a funded ratio that is getting better. We need to continue to measure this every year going forward. I would say that your pension is as secure as it was going into the pandemic. Now, we will measure again what the investment markets do, what this means to our funding as it relates to the public workforce as the state of Colorado and the country deals with the economic impact of budgets going forward. Certainly, our funding mechanism is based on a growing public workforce, and certainly, I think coming out of, at least in the state of Colorado, where the General Assembly was dealing with a $3.3 billion budget deficit, that's certainly going to have some downstream impact to our members and what that's going to look like going forward. So we just need to keep our eye on it. I don't believe that where we stand right now that your pension is in any jeopardy. Senate Bill 200 has a number of mechanisms that will allow us to modify benefits and increase contributions to keep us on a path. So where we stand now, we certainly could see future changes in contributions and future changes in benefits coming out of the effect of the pandemic. But I don't think that we're at a point where the retirement is not secure.
Okay, as a reminder, if you have a question for Ron and Amy, simply press 0 on your phone, and you'll wait until you hear your name, at which time your phone will come off the listen-only mode, and you can ask your question for everyone to hear. So we're going to go to our next question, and Sylvia, you are on the line.
So you're live.
Sylvia, you're live on the line. Go ahead with your question.
We'll take her question forward. Sylvia's question was how long has the annual increase been suspended? And I think the second half of that question would be, will we be paying an annual increase this July? So coming out of Senate Bill 200, there was a 2-year delay in paying the annual increase. We had 2 years of not paying the annual increase. In July of 2020, we are on schedule to pay it again. It will be a 1.25% increase in benefits be paid at the end of July. That's coming out of the Senate Bill 200 work. So for those of you who are eligible to receive an increase this year, it will come in at the end of July with an additional 1.25% in your check.
Okay, let's take another caller. And we're going to go to Romajan from Montrose. Romajan, you are online.
This is Roma Jean, and yes, my answer has been answered. My question has been answered. So thank you very much, and I will appreciate the 1.2 increase in my salary, my check, as I am retired. Thank you.
Thank you so much for listening, and we appreciate it.
Okay, let's take our next caller, Roxanne from Carbondale. Roxanne, you are on the line.
Hello. My question was, Does PARA invest in private prisons?
Roxanne, this is Amy. Thank you for the question. It's one of a number of questions that we receive about our overall investment portfolio and our philosophy towards investment. While I won't get into specific holdings on this call, I would characterize our investments as very broad and very diverse. So I suspect we are invested in private prisons, at least in our passive portfolios. So these are portfolios that mimic global indexes, in this case probably equity indexes. And so we use index investment management in order to have lower investment management fees. And as part of that, we do not do fundamental analysis on those companies. So we have exposure to all public equities in general around the world. And so that's probably where we would hold those private prisons. In actively managed portfolios, so those portfolios run by your PARA staff as well as external investment managers, we don't hold any private prisons in those active portfolios on the public equity side. But again, we likely do within our passive portfolios. Thank you for the question.
Okay, Ron, our next question is, can you tell us of any recent changes that affect our members or retirees?
We have a number of things that we're doing internally, and I think one that I really am remiss, and I apologize for not starting with this. We recently made a change to how we access our website. We've added mandatory multi-factor authentication. Big fancy way to say that you need two pieces of information to be able to log into our website. We did that for security reasons because basically in this pandemic we have a lot of folks who are trying to get access to members' information and trying to get access to the dollars of our members' accounts. So we've added this new feature. I understand the rollout has been difficult. We've had a few issues in terms of having that work well. Those issues have been addressed. So I want to apologize first off to anybody who had difficulty in the transition when you tried to log in. Again, we really did not intend for there to be nearly the issues that we had. But it's important that we protect your information, that we do this kind of security level here at PARA. So that's a big one because really that change will allow us to do a number of things as we continue to modernize the organization and provide more services to our retirees and members through our website and through our digital channels. So that's a big one, and I'm pretty excited about where it will take us. Again, I do want to apologize to anybody who had difficulties going through the process. We are continuing to work that in. Like I say, we're doing it to ensure that your accounts are safe and that your information is held in our trust, and we take that very, very seriously as fiduciaries. And that is why we're adding these additional layers of security, again, to protect your information from outside accounts.
Okay, thank you for that update. We're going to take a couple more questions from our audience. Remember to press 0 if you have a question for us. We're going to go to James in Colorado Springs. James, you're on the line.
Yes, I have two quick questions. Number one, right now with the Federal Reserve lowering the interest rates to 0, why is PARA still paying 3% interest on members' money? And are we projected to get a cost of living raise in 2021?
Thank you, James. Thank you for the question. As it relates to paying 3% on member accounts, the board is charged through statute in setting the interest rate each year. They looked at that in November, and really their philosophy of how they're determining where that interest rate should sit. And the board's philosophy on the member accounts is that the dollars that we're paying in interest and the matching as part of statute are really designed to receive an outcome in retirement. And at 3%, again, being a long-term investor, I know that rates currently are at 0, and the board set that rate to ensure that when you get to retirement eligibility, that you don't work a full career, that those dollars can be annuitized into something that's called a money purchase benefit to give you the best outcome in retirement in terms of replacement ratios. It does have a cost, but the interest that we put on accounts really is from the overall perspective. It has some cost to it, obviously, but it is not a main driver. The annual increase is a bigger driver. There are other components to the benefit that are more expensive than the 3%. The board looks at this every year, really trying to get to a number that incents folks to think of the dollars as retirement dollars and not as a pot of money that's being saved, and with, again, an end goal of providing retirement security and replacement income in retirement. And into 2021. We will be measuring at 2021 the increased amount. We went through the auto adjust feature as part of our CAFR. Yes, based on our calculations, the annual increase will be paid in January or in July 2021. When we measure 2020, if we have to make further adjustments, that would be reflected in July of 2022. But I can say that based on our 2019 financials and the elements of Senate Bill 200, that we are intended to pay an annual increase in July of 2021 as well. Thank you for the question.
Speaking of funding, Ron, I think that's a good segue into talking a little bit about 2020 and where things may sit related to the global markets, et cetera. The global pandemic not only has caused a significant disruption in investment markets, it has changed our everyday lives. PARA won't have official data about this year until the 2020 CAFR is compiled and audited about this time next year. However, we don't want to wait until next year to acknowledge that so many of the people responding to this crisis are PARA members. In addition, just to give you some insights into the overall portfolio, we have some data on the benchmarks for our public markets investments, and this represents the vast majority of our overall portfolio. That benchmark thus far in 2020 is down 1.1%, and this is through yesterday. Our global equity portfolio benchmark is down 4.8%, and our bond portfolio benchmark is up 6.5%. Again, we won't have more detailed information until our 2020 CAFR is released in June, but as you can see, the markets have not recovered to the significant extent, but we are invested in those markets and do participate in market recovery throughout the year.
Okay, while we're queuing up our questions, let's take a quick poll and ask a question about our website. Allison, will you please conduct the first poll?
Absolutely. Thank you so much, Patrick. PARA recently launched an enhanced account security feature on our website called multi-factor authentication. Now, when you log in with multi-factor authentication, you'll type in your username and password like usual. After that, PARA will immediately call or text your phone with an additional code that you'll type in. The new feature helps prevent unauthorized people from accessing your account. All PARA members and retirees will be required to enroll in multi-factor authentication in order to access their PARA accounts and keep accounts as secure as possible. So now for our first polling question, which you'll respond by pressing the buttons on the keypad on your phone for this. So if you're on your smartphone, you'll need to switch to that keypad screen. So our first polling question goes like this. We want to know, have you enrolled in multi-factor authentication in order to access your PARA online account information at www.copara.org? Please press 1 for yes. You have enrolled in multi-factor authentication on our website. Press 2 for you have not yet enrolled in multi-factor authentication on our website, and then press 3 for if you have not created an online account with PARA. So again, question is, have you enrolled in multi-factor authentication in order to access your PARA online account information at www.copara.org? Press 1 for yes, you have enrolled in multi-factor authentication. Press 2 for no, you have not yet enrolled in multi-factor authentication, and then press 3 if you have not created an online account with PARA. Thank you all so much for weighing in on those. We will reveal those results here in a little bit. I'll leave that open for a while so everyone can continue to vote. And with that, back to you, Patrick.
Thank you, Allison. We're going to take another question from our audience. Larry, you are on the air with Ron and Amy.
Yeah, hi, this is Larry Robbins. Thanks for taking my call. Senate Bill 200 had a provision in there where the state legislature would make a contribution every year to help PARA become fully funded. And lo and behold, and I understand that this is a tough time, but it seems like us para employees always seem to bear the brunt of things. They voted to suspend that contribution, and it's this year, it could be next year. And, that has a direct effect, I believe, on not only whether or not we get an annual COLA raise and or how, our COLA is calculated, because it's based on the fact of funding, if I'm correct. So I wonder if you could address that concern. I just want to say this, kind of an addendum, that it just seems like we as, former state employees, it just seems like we constantly are taking, the hit, because some years ago we had a Senate bill and then things didn't work out, so then they revised it, Senate Bill 200, and it just seems like they continue to chip away at our benefit. And I'll just say this in final comment. It just seems like we're getting more and more to the point where our benefit isn't even keeping pace with inflation, and I'm very concerned about this. Although I am thankful that we have a benefit, because of talk of other states where they want to do away with the benefit as it is. So anyway, thank you. Appreciate your time, and I'd like to hear your comments.
Thank you for the question and the comments. I'll answer the question, and you are correct that there was a component of Senate Bill 200 of a direct distribution of $225 million to para that would come each year, intended to help pay down unfunded liability. In the process, when the General Assembly came back this year to balance the budget, and it had a $3.3 billion hole, there were a number of options on the table that related to para that were balanced budgeting measures that were proposed by the Joint Budget Committee staff. We worked with the General Assembly to educate them on what the effect of those changes would be, because as you stated, any lack of funding coming in does have a direct long-term impact. And through that conversation with them, they made the decision to take the $225 million and not send it to para this year. They didn't do a number of the other changes, which would have had also a negative impact on para's long-term funding. So in terms of, the perfect would have been that there would have been no changes to para's funding. The worst case would have been all of the changes that they were considering would have gone through to para. So to have the $225 million not come to para this year has an impact, but fortunately, to a degree, the investment market return this year helped mitigate that concern as it laid out to the calculation of whether or not the annual increase will be touched. It is a one-year change. You're absolutely right that it is possible next year, if they are in the same budget crisis, they may make the same decisions again. We as staff and the board we stand firm on not defunding the plan and holding to the tenets of Senate Bill 200, but knowing that the General Assembly also has a difficult job ahead of them. And so, it's difficult to say it's the best outcome, but it certainly is a better outcome than was being proposed, based on what some really difficult decisions that they're having to make. And as you say, that the public workforce who is retired is seeing that their COLAs reduced, and it does have an impact on inflation rates moving forward. Absolutely agree. But as the prior caller said, interest rates are low, so that inflation is moving at a different pace as well. So it's the base benefit has not been touched. There's no conversation about doing that, and the General Assembly has reaffirmed the value of a defined benefit program for state workforce, for public workforce. So I believe there is a strong desire from the General Assembly to continue to have a para-like our para to be the functioning retirement system for the public workforce, and to try to mitigate all aspects of what they're balancing against the budget and what they're doing from the end of the day to reach full funding. So the para board understands it. As para staff, we understand it. Para staff members are para members as well. So the additional contributions that are coming in are borne by the folks who work for you here at para as well. And we'll see those same decreases in the annual increases when we get to retirement time as well. So it's because the para board understands that it was a difficult conversation at the General Assembly this year. We spoke to the Joint Budget Committee members quite a few times, and they certainly were having a difficult job to get through, and I empathize with their work. But I do appreciate and absolutely do understand that reductions in that annual increase do have an effect on inflation, and that's why we're doing all that we can here to ensure that we mitigate that to the extent that we can. But that was the decision they made, and it is a one-year decision, but it will have to be re-upped if they decide next year that they need to get dollars again to balance the budget. Certainly we will be back in the conversation again. That is a big pot of money for them. It's a nice pot of money for us. We pay out $4 billion in benefits to our retirees every year. So we pay over $400 million a month. So the $225 million is a large pot of money, but it is from a perspective of what we pay out in benefits, half a month of a payroll. So we are a large scale in terms of the dollars that come in the investment market. So again, I appreciate the commentary, and I certainly appreciate the question.
Okay, so it sounds like the one-time adjustment of the direct distribution is just that one time. But where can the audience go to learn more and stay informed about proposed legislation?
Oh, absolutely. We on our website, we have a Para on the Issues blog that really speaks to where we are legislatively. We as things come up broadly across the pension landscape, we speak to it. Kind of the title says it. Para on the Issues is our take of what's going on in the broader pension markets, and that's where we really track legislation to a great degree. So if that is where you have an interest in what's moving forward, again, they are out of session right now, and we're rolling into an election year, so we'll see what the makeup of the General Assembly looks like coming into 2021 and what legislative changes might come forth from that score. But that's a very good place to get information about the Para's legislative effort. And if you're interested in being part of the program that really addresses how we talk to the General Assembly, we have an ambassador program, and we certainly have an option there on our website to figure out whether you want to be a Para ambassador, because that's another way to get involved in the conversation as a Para member and Para retiree.
Great. And speaking of our website, Allison, can you give us the results of our first poll question?
Absolutely. Thanks so much, Patrick. So again, our question was, have you enrolled in multi-factor authentication in order to access your Para online account info at www.copara.org? 60% of our listening audience today, first off, thank you to everyone who weighed in and voted. 60% have not yet enrolled in multi-factor authentication. 23% have enrolled in multi-factor authentication, and the remaining 17% have not yet created an online account with Para.
Thank you very much for the results. Let's take another question from our audience. Mary Ann from Las Vegas, you are on. Mary Ann, you are on the air with Ron and Amy.
Okay, thank you. My question is, how often do you move funds around? Does Para move funds around to accommodate for market volatility?
Hi, Marianne. This is Amy. I'll be happy to answer your question. So our assets are allocated based on a strategic view that is dictated by our Board of Trustees. Every 5 years or so, they, in conjunction with their external investment consultant, do an asset liability study and analysis that dictates our overall strategic asset allocation and provides ranges within which staff operates and manages the overall assets. The strategic asset allocation is designed to return the long-term actuarial rate of return assumption, which is 7.25%. So those building blocks, those strategic targets to, for example, global public equities and private equity and real estate are all combined to yield that 7.25% over the very long-term period. So this is a full market cycle view, 10 to 30 years plus. So market volatility, certainly we experience it because we are always invested in the markets, but we are keenly aware of the board's objective of those strategic allocation targets and ranges. So as the markets evolve and as market volatility impacts each asset class differently, we respond by rebalancing the portfolio back to the targets dictated by the board. However, during periods of market volatility, we may stray from those targets in any given period on purpose because it's expensive to rebalance the portfolio. So that's why the board allows us to operate within those strategic ranges. And so, for example, during the first quarter when we experienced some real significant market volatility, we ended up underweight global equities during that period for a while until there was more liquidity available in the markets and we were able to rebalance the portfolio going into the second quarter. I would also like to reiterate Ron's point of the fact that we pay around $4 billion in benefit payments throughout the year. And so as we pay those payments, we use those cash outflows to also rebalance the portfolio. So any given asset class that may be overweight relative to the strategic target, we would look to sell assets there to fund those benefit payments. So we aren't looking to time the market at the total funds level. We let the underlying investment managers and those portfolios that are in each of the asset classes, that's their expertise. Our job as staff is to execute on that strategic asset allocation and implement the board's overall philosophy. Thank you, Marianne, for that question.
Thank you, Amy. We'll take another question from our audience. Patty from Golden, Colorado, you are online.
Yes, good morning, and I so value and appreciate your expertise and dedication to keeping us updated as retirees. My question may have already been answered because I didn't get logged in or called until about 13 minutes after 10. So I imagine my question was one of the more pressing ones. So I'm sorry to re-ask it. But my question is, with the pandemic and the stress that's gone on and everyone worrying about everything we're worrying about, how are we as retirees with our pensions? I'm not even talking about cost of living. I'm talking the bare basics of, are we okay? Can we anticipate continuing to receive our pension or our monthly paycheck, let's say, literally for the next few decades as a single woman retired school teacher at age 66? Am I going to be okay for the rest of my life just living off of my PERA?
Thank you for the question, Patty, and I do apologize for the delay in getting through all the calls. We've been able to get through them faster in the past, and I think in sort of what's going on pandemic-wise, another thing that's it's been slower. So I apologize, and it's great for us to re-answer a question that's been asked for folks who get on late. So certainly don't apologize. It's our issue for not getting to you quicker. It's a question, is PERA safe? And certainly, yes, your benefit is we intend to be here for the long haul. And as I think you said, markets this year are volatile, but there are mechanisms in place through legislation to adjust for those market volatilities going forward. So, you never 100% say I can see the future, but yes, PERA has been around for 80 plus years, and we intend to be here more. And your benefit, as it currently stands, again, the mechanisms in place in Senate Bill 200 that allow us to play with the levers a little bit in terms of contributions and benefits should keep us on a good track going forward, minus some ridiculous turns in markets or demographics. So yes, PERA is in a very safe place, and just in terms of us, in generally, we've pivoted with the pandemic to how we operate. We went from really being most folks working here to almost everybody working remotely. So we've been able to continue to move along through the pandemic from an operational perspective, from an investment perspective, and really, it's not perfect as we're all kind of going through this, but PERA is in as good a shape as it can be as we're all going through this together. So again, thank you for the question, and we should be here. We'll always be here.
All right. Thank you, Ron. We have another investing question. Brian from Gibson, you are on the line with Ron and Amy.
Yes. My question is, what is PERA's philosophy or strategy regarding environmental, social, and governance fund investing, ESGs? Is the priority still overall return on investment?
Thank you, Brian, for the question. I'll jump in and start, and then Amy can add some color to the conversation. The PERA board is currently looking at their proxy voting policy with a bent in the strategic plan towards coming down on where they stand on ESG. And I think ESG, for those, again, environmental, social, and governance, is how you look at your investment side. It is part of the mosaic that our investment program looks at, that the board is looking at going forward. There is not a mandate from the board to invest ESG, to do one thing or the other. And they are looking at this conversation right now in terms of how we vote our proxies and really where our state lands. This has been an ongoing project of the board through the year, and I will land on where they stand on that here by first part of next year. But really, at the end of the day, the PARA board does not, as it currently sits, and I think probably looking forward, it's part of what we look at. There's a lot of things that our investment program looks at, and again, you can give more color to it. So there isn't a philosophy to say we will do one thing or the other with a ESG bent in particular.
The only thing I would add, Brian, to your question, and Ron's answer, I should say, is that our overarching objective remains first and foremost risk-adjusted returns. So to the extent that we do incorporate ESG factors in our analysis of managers, companies, commercial real estate, et cetera, it's what is the impact on our expectations to returns. So, always with that fiduciary lens, we are reviewing our investments. I just want to assure you of that. But as Ron did say, the board is revisiting their philosophy, exploring this throughout 2020 through their review of their proxy voting policy. And so stay tuned for more on that. Thank you.
Okay, our next question is a funding question from Bob in Denver. Bob, you are on the line.
Yes, I'd like to know what percentage of the funds that PARA holding that covers the debt that PARA has. What's the percentage?
Thank you, Bob. I think if I understand the question, we are at an overall funded status with 61.9% across all 5 funds. But we have 5 different divisional trust funds because we have state workers, we have school, we have local government, judicial, and then when we merge with the Denver Public Schools, they are their own separate trust. So each of those funds are at a different funded level. None of them are at the currently fully funded position. I mentioned earlier that coming out of 2019 from a projected basis as to when each of those funds would become fully funded, that the state division fund is looking at 22 years before it reaches full funded status, the schools in 24, local government in 14, judicial in 12, and the BPS division in 11 years. So we are making progress towards full funding, but none of the PARA funds are at this moment 100% funded. That is the goal of Senate Bill 200's work to get us where all 5 divisions are fully funded by 2047, which is 30 years from the bill passage. So we're making progress because of the good investment return year this year, and we'll keep monitoring going forward. But from a full statement, none of the funds are fully there, but we are on a path. We are solvent in terms of, obviously, we are able to pay benefits, and we'll do so for the longest term, but we're just not at a fully funded status yet.
Ron, for those who are newer to the terminology, could you explain what fully funded means?
Yes. Yeah, what fully funded means is that the liabilities that are being answered, the benefits that we have promised to retirees and the benefits that have been earned by our members, we have the projected dollars to pay those benefits. It doesn't mean that when we get to fully funded, we will not need to continue to get further contributions because we need to continue to fund the benefits for the next month that's being earned in the next month and the next month. So what the 100% funding would mean is that we have all the dollars that we are projected to need at that point in time to pay all of the promises that have been made. Now, certainly, as we say, we are paying about $4 million out in benefits to our benefit recipients. We take in about $2 billion a year. So we have a cash flow deficit of about $2 billion. That's where the investment program comes in. So we have, at the end of 2019, around $50 billion in the trust fund. So just kind of taking it from a purist perspective, there's $50 billion that we pay out for. So from a solvency perspective, we have dollars in the bank to pay benefits over time. Getting to full funding means we've just got every promise that's been made in terms of benefit covered at the current point in time.
Thank you very much. Our next question is related to Social Security. So we're going to go to Sandy in Colorado Springs. Sandy, you are on the line.
Good morning. Thank you for taking my call and for doing this. I'm wondering about if you can tell me if there's any movement regarding how retirees who are working, maybe continuing to work and have worked throughout their career for para and then Social Security, how that is moving along. There's been that concern for years that there's always going to be a cut from one or the other. And while I haven't pulled for Social Security yet, I am pulling para. I want to know that what I'm going to be looking at in the future. I don't remember what that situation is called. I know there's a term for it.
Thank you, Sandy, for the question. And you're right, this is a perennial question for folks who have worked under public employment and worked under Social Security. The para, and what you're talking about is an offset, a reduction in your Social Security because of having para benefits. And it is something that is taken up at the federal level. It is something that the state of Colorado's General Assembly can't touch. It is a federal law, and it comes up every year. And unfortunately, it should be paid for by reducing the cost of the dollars of Social Security and members in the public workforce. That's a savings to Social Security. So to give a person who's got both public employment and non-public employment the full Social Security benefit as it stands has a cost to it, and that has not been cracked in terms of the funding aspect of it. In terms of where the reductions come from, your para benefit will never be reduced. The reduction is always on the Social Security side. Para's benefit, if you have both, is locked in. What you've earned does not get touched by what you have in Social Security, but absolutely your Social Security benefit is reduced based on if you have a para benefit and some real technical details about how long you worked under Social Security coverage. And it is a pain point. It is in our call center, I think every year. Being up this year with the pandemic and other questions that come up, it is a question that we get most often is what is going on in terms of getting that law changed. And there are a lot of folks working to lobby for it, but nobody's cracked the solution of how to pay for it from the perspective of getting that passed through Congress. So I wish I had better answers to how to get it fixed. I agree with you, it is a perennial issue, but all I can say is that your para benefit will not be reduced.
Okay, so that quick reminder, if you would like to listen to this town hall meeting again, the full recording of this conversation is available next week on www.copara.org/townhall. And now I'd like to ask you another polling question. Allison, would you please take us to our second poll question?
Absolutely. Thanks so much, Patrick. Para is always looking for new ways to communicate with our members. We want to know, would you follow Para on Facebook in order to stay informed of current issues affecting your retirement security? So again, voting 1, 2, or 3 on the keypad on your phone. So press 1 for yes, you would follow Para on Facebook to stay informed. Press 2 for maybe, you might follow, you might look at Facebook to learn about Para. And press 3 for no, you don't use Facebook or wouldn't look for information about Para on Facebook. So again, we want to know, would you follow Para on Facebook in order to stay informed of current issues affecting your retirement security? Press 1 for yes, you would follow Para on Facebook to stay informed. Press 2 for maybe, you might look at Facebook to learn about Para. Press 3 for no, you don't use Facebook or would not look for information about Para on Facebook. Thank you all so much for weighing in on that. And let's get back to your questions. Patrick?
All right. Thank you again for being on the call with us this morning. We have time for a few more questions, so let's get back to those. We're going to go to Dinah in Boulder. Dinah, you are online.
Hello. Hi. Can you hear me?
Yes, we can. Thank you.
Okay. I am concerned about what can happen to the COLA in 2021. I understand that the rate of return was for 2021 is related to the rate of return in 2019, and you said that would be 1.25. Now I'm wondering what can happen to our COLAs going forward from 2021? And then also my second part of my question here is, with the Senate Bill 200, all retirees have to hold to all of those tenets that were passed in that, but the state can then opt out of their obligation. Now, we know that basically the fiscal mess that PARA has gotten into is because since the early 2000s, the legislature stopped making their employer contributions to PARA, and that's what created this mess. And now they're opting out of Senate Bill 200, but we have to follow through. So my question here is, I'm very worried. Are they just going to opt out of their obligations for the foreseeable future? Is there any way that we can make them meet their contributions to PARA? Because as I said, this is the reason why we're in this mess. So I want to go back to the COLA for 2021 and then also 2022. If you can be more specific about the actual COLA percentage, 1.2, or will it be, since it was a 20% return in 2019, will it be for 2021? Will it be higher than the 1.25?
Great. Thank you for the question. I will cover the 2021. Because the annual increase in 2021 will be 1.25 based on the measurement that we did at the end of the 2019 plan year. The 20.3% return that Amy spoke of earlier has put us in a better position. That's the math that's being done to determine whether the annual increase is to be moved up or down came out to a ratio of 103%. For us to increase the annual increase, that ratio would have to be at 120%. So it will take a while before we are actually increasing the amount of the annual increase. That was done on purpose by the General Assembly at the time of Senate Bill 200. They wanted to ensure that we had a cushion before we were starting to increase benefits, not really kind of whipsaw folks of increasing the annual increase one year and then taking it back away the next year. They wanted to ensure that there were dollars in the trust fund to do so. But that's what 2021 looks like. In terms of 2022, we won't know until we measure 2020. And so we're midway through the year. The markets will be a factor. The board's going to do what's called an experience study, which means they'll look at the last 4 years of our experience in terms of retirements and mortality and all the things that go into measuring the liabilities of the plan. And that may move the funded ratio as well. So we just won't know where we sit in terms of the 2022 annual increase until we measure 2020 at the end of the year. So we'll know that in June of 2021. Again, the markets were still half a year out, so I wish I could be more specific and tell you yes or no. But based on where we're at, I think we should all be considering the fact that there may be another reduction in the annual increase and increase in contributions coming out of the 2020 plan year. I don't know that, but certainly with the pandemic and with the measurement, it's a possibility. Don't want to, as difficult as it is for us to say that, I don't ever want to catch our retirees and members off guard and not be very transparent as to where we currently sit. So where we are now, it's a possibility that 2022 will be affected based on 2020. We just don't know yet right now because we're halfway through the year. That reduction could go, what could that look like? The most that reduction of that annual increase could be would be down to 1%. It's currently at 1.25. The most the annual increase can move down in any given year is a 0.25%. So the impact in 2022, if there is one at its maximum, would be that the annual increase would change to 1%. Again, we won't know that until we get there, but certainly again, this year is volatile, and what that does to our funding, we'll know more in 2020 going forward. In terms of the question related to what the states, in terms of paying contributions, it's a small point, but the state has always made the contributions to us that we have requested. Now, whether they were the amount of contributions that actuarially would have kept us at a funded status is different. And in that case, there was certainly a point in which the amount of the contributions that were in statute did not cover the actuarial cost to get us fully funded in 30 years. So when the conversation is kind of, you hear a bunch, the state didn't paid their share. The state paid what was in statute to pay. So again, it wasn't enough to cover it, and the board inside our CAFR annual report would quantify that distance of what we're not getting to get there. But they are the plan sponsors, and they were setting the contribution balance. And I can say that certainly through Senate Bill 1 in 2010 and Senate Bill 200 in 2018, this General Assembly has really hunkered down, and the changes that the board proposed and the mechanisms of Senate Bill 200 are intended to not be in that position where we're not getting the contributions that PARA needs to get to full funded in 30 years. And part of that change, as we know, is movement in the annual increase. But on the other side of the equation, it is movement in employer contributions. The state of Colorado, in July of 2020, is paying more in contributions, as every school district is, as every local government employer that's in PARA is paying more in employer contributions, and every active employee is paying more in their contributions into the system to help pay down unfunded liabilities. I do understand, certainly from, it is a shared sacrifice, and it means every one of us. See a question that relates to is PARA staff feeling the same thing? Absolutely, PARA staff is. We have the contribution burden that every employee has as well. So we are all, those of us who serve you and this organization are under the same guidance as you are. So we do understand what we're going through there. So again, the state has paid. Senate Bill 200 put us on a much more disciplined fiscal path, and hopefully we'll stay to it. It's unfortunate the 225 was taken away this year, but understanding the $3.3 billion hole that the state's in and what that will look like at the school district level in terms of teacher pay and state employment pay is going to be a very interesting conversation moving forward. So I wish I had better news to say about what we think 2020 will look like when we get to the end of it, but we're always want to make sure that we're being very straightforward with everybody as to where we currently stand at any given point.
The pandemic has certainly raised lots of questions this year, and our next question relates to insurance and the pandemic. So we're going to go to Betty from Pueblo. Betty, you are on the line.
Thank you, and thank you for your work. My question relates to our insurance premium. After 40 years of interacting with the state of Colorado, often whenever we get a cost of living increase, then our insurance premium also goes up. As I get ParaCare, I think, and I could be wrong, you could explain it to me, that PARA negotiates our ParaCare premium. So I guess what I'm asking is, can you prevent the insurance companies from raising their premium more than my cost of living adjustment?
Thank you for the question. I don't think we can guarantee that the health companies will not raise their premiums more than the 1.25. But we are doing everything on this end in our negotiations to minimize the amount of increases inside the ParaCare program. We're about to release rates for the next ParaCare cycle. I know our team is working very hard in negotiating to do the best we can to minimize the amount of increase. Healthcare costs just keep rising. I know our vision and dental program, I believe we're going to end up with a no increase amount. But on the healthcare end, I think there probably will be a higher than a 1.25% increase in rates. But we are working very diligently on that. The COVID, and there's a lot of coverage that comes from the federal government in terms of how that will work in ensuring that we don't have costs borne by retirees. But we work on this all the time. We are doing all we can to minimize it. Being the largest plan of folks in the state of Colorado does give us some leverage, but being a retiree plan also makes it probably more expensive than you find from an active employee plan. So we get the bonus of the large scale of who we are, and then because we're kind of to an older group, certainly on the pre-Medicare side where Medicare helps us out, we're really dealing with those costs broadly as a nation, and it's reflected in there. We hear you. That is what our team works on all the time when we get to this time of year, is how do we really, at the end of the day, get to lower costs. We have a self-insured program, which we're setting the premiums on, and then we also have those that are in our Kaiser program. Those rates are really coming from Kaiser, looking at our population and how it's worked. So, like I said, I'm sorry I cannot tell you that the rates will be less than 1.25% increase. I would be very surprised. I don't know what they are, but unfortunately in healthcare we haven't seen where we get rates reductions or premium increases of that small in a long
Okay, our next question relates to benefit reductions. Francis from Colorado Springs, you are on the line.
Hello, my name is Francis, and I have a question. If Colorado continues to experience a budget shortfall in years to come, realizing that there may not be an annual increase, is there or could there be a potential that current retirees could see a decrease in benefit? Thank you.
I'm sorry, for that last part of that question. So, is there potential for, let me help with that.
Is there potential for reductions to existing retirees?
No, that's a great question. The base benefit, the benefit increase, the annual increase is something that has not been reduced. There is nothing in statute that would have a mechanism to do so. We believe that through sort of Colorado Constitution that the base benefit is something that the General Assembly wouldn't move unless there's a true actuarial emergency, and that would take some litigation. As you recall, back in Senate Bill 1 back in 2010, the question of whether the annual increase could move went all the way up through kind of the Supreme Court conversation. So the base benefit itself is something that I do not see in the future moving. What you have heard as the base would not be modified. The variable is the movement in the annual increase.
Okay, we have the results from our second poll in which we asked if you would use Facebook to stay informed about PARA. Allison, would you provide those results, please?
Absolutely. Thank you so much. We had 62% of our listening audience said no, you do not use Facebook and would not look for information about PARA on Facebook. 20% said yes, they would follow PARA on Facebook to stay informed, and the remaining 18% said maybe. Back to you, Patrick.
All right, thank you, Allison. And with that, we must conclude our telephone town hall. If you have questions about your account, please contact us at 1-800-759-7372, or for general information, visit us online at www.copara.org. And thank you for joining us, and have a good day.